This is Pat Walker, Mission Winners, doing a video overview of the ETFs. Why do we look at the ETFs? Well, here's a fact. Leading groups produce leading stocks, and leading stocks produce leading groups. By looking at the ETFs, we get a good idea on areas to maybe concentrate on, but also areas to avoid. And either side of the same coin, but both of it can really help us, both sides. Here we go. We're looking at, and you can always see the ticker symbol up here, okay? Robotics, artificial intelligence, and you can see this is weekly, it's dropping daily. There's no power here. Here's a great simple foundation for everybody. Price is better above a rising 50-day moving average line. That's the green line. Good to remember. Makes it simple, works, all right? Cloud computing, same situation, lagging here. Even on Friday, it starts to lift off, and look, it opens and it closes below where it opens. There's no power in cloud computing. Be cautious at this time. Diamonds lagging. Look what this did on Friday. Gaps up and closes near the lows. Less volume, but there's no power there. It's below the falling 50-day. Just be cautious. Dow Jones Internet, there's no power here. Okay, and again, look what it did. This is a great lesson too. Just because it's a green bar doesn't mean it's a bad bar or good bar, and just because it's a red bar doesn't necessarily mean it's a bad bar. But you take a look here, it gaps up and closes near the lows on a pickup in volume. It's met with selling pressure. That's the open and that's the close. There you go. Continue onwards. IBD 50, there's not a lot of power here, folks. All right, it's below all the moving average line, lower lows. We need to see power in the IBD 50. Okay, that would be nice. First Trust, Dorsey, Right Tech, lagging, just not a lot of power. China lagging, no power. Gold miners, look at that. Look at the weekly drop here. Stay away from the gold miners. That's good to know. It narrows off our focus on what we should be looking at. Gold. It's lost its luster. There we go. I had to say it. Sorry. Biotech, avoid. Nothing there. Oil and gas. This one was hanging in. It's acting like a little bit better, energy related, than a lot of the industries. Okay. Started to fall again, though, on Friday. When the market gets bad, it takes almost everything with it, team. Just be aware of that. Okay. Not a lot of power there. Be cautious. Continue onward. Software technology, there's nothing there. Just not at this point in time. Leave it alone. Medicine needs medicine. You got to have fun too. You can see the drop on the daily and on the weekly. This is why I love weekly and daily. It really helps frame up the action better, bigger picture. Mid-cap, lagging, be cautious with it. Aerospace and defense, they're not flying right now. Home construction, it's slipping. It was a great trend for us. We caught this and rode this the whole way, but now it's lost its luster. Don't argue with it. Leave it alone. Leads to another important point I'll share with you. Don't have pet stocks like, oh, I always like this one. Each stock has to stand on its own merits. It doesn't matter whether we, quote, like it or dislike it. It has to do with the price and volume action of the stock. That'll help you. Growth is lagging. Be careful with S&P 500 growth. Small caps, really lagging. Be careful with small caps. U.S. real estate, there's nothing good there. You can see it's dropping. Nothing to do with it. Transportation, lagging. Airlines, grounded. Nothing really going on with the airlines. Regional banking, lagging. Be cautious with that. Mid-cap, there's not a lot of power there. And look what it did on Friday. Gaps up and closes down near the lows on a pickup in volume. It's met with selling pressure. Oil services, it was acting a little bit better. Okay, we've been involved with energy, as I cited earlier, but now look what it's doing. It's starting to drop on a pickup in volume. Still above the rising 50-day, but this is called loose, wide and loose patterns. Be careful with those. Wide and loose patterns, I'm going to go back to this. Wide and loose patterns indicate high investor emotions. Oh, this is good. Let's go. Let's go. Oh, gosh, it's getting a little bit. Oh, no, look at this. Oh, gee whiz. Oh, wait, it's getting good again. Oh, no. Don't get involved with things like that. All right? High investor emotions are not conducive to good decision making, and it's reflected in the charts. All right? Pharmaceuticals, lagging. Be cautious with that. NASDAQ 100. Look what this did on Friday. Look, it was starting to pick up here a little bit. I like this reversal bar here off the bottom. Gaps up on Friday, runs up, and then reverses and closes in the bottom third of its daily range on a pickup in volume. It's met with selling pressure. We need to see this start to improve, okay? The weekly does look a little bit better, okay? But we need to see this start to lift up, okay? Until then, Caution is in order, and we manage it. QQQ, same situation. Retail. This is what you call, they need a fire sale. There's nothing good there. Look at that. Look at that drop. Never argue with price. Never. That will really help you, team. Silver. Nothing. Steel. No power there, really, folks. Needs to show some power. Semiconductors. There's not a lot of power. It needs to start to lift again, okay? Spiders. Look what this did Friday. The S&P 500 gaps up and then closes in the bottom third of its daily range on a pickup in volume. Met with selling pressure. We need to see some power on the way up. Power is measured by price, backed by good volume pickup. That'll really help you, team. That's for everybody. Spiders leveraged, SSO leveraged on the S&P 500. It gapped up and closed down in the bottom third of its range on a slight pickup in volume. It needs to show some power on the way up. Nothing yet. Solar, there's nothing there. Small cap, there's nothing there. Don't overthink it like, oh, look at this. Look at, there's nothing there. Look at all the distribution and a big distribution on Friday on increasing volume. There's nothing to do with small caps. Now, that's a good thing to know. You can say, well, that's negative. No, you know what it did for us? It says, and it's been saying it for a while, avoid small cap stocks. That's good to know. It's good to know what to look for, and it's also good to know what to avoid. We do both the mission winners, and it helps us. Uranium's had a decent run. It's tough to find any good uranium stocks, okay? But this one has had a decent run. All right, so something to have considered or considered. Continue on. Oil, we've been involved, as I said earlier, we've been heavy in oil energy stocks. And Schlumberger was one of them, but this is just getting a little choppier up here. But this is a great lesson. Up on heavy volume, down on decreasing volume. That's good to see. USO still doesn't look too bad. Okay, there you go. I'm not saying buy it, but energy doesn't look like a bad place to look. All right, but remember the M and mission winners. The markets get rough. It impacts almost everything. Consumer discretionary, there's no power there, leave it alone. Aerospace and defense, nothing there, leave it alone. Biotechnology, avoid. That's it. Nothing to do with it. Stay away. Home builders, as I stated, look at the weekly chart on home builders. We owned like, I think, 3 or 4 of them. That was a great run. But now look, it's lost its luster. There's no power there. We have to leave it alone at this point in time. That's simple. Materials, how do you build homes with materials? Home builders start to back off, so do the material stocks. They're connected. That's kind of neat. That's a great little investing lesson for you. Communications, lagging. There's not much power there. Be careful. Energy, it's still not too bad. In relation to many that we just saw, this is still above the rising 50-day. But it did fall on about the same volume as the previous day, and it had a lower high. This needs to start showing some power. All right, just to go back to this. That's what we need to see. Financials, lagging. We've stayed away from financials for a while. There's no power there. Industrials, nothing there. Technology, it started to go on Friday, and then look where it gaps up, runs up, and look where it closes. Just not a lot of power in technology either, and it's below the falling 50-day. All right, be careful with it. And I need to pause here and say this again. I can't stress this enough. I don't want you to think like, oh, Patrick's all negative and everything. Oh, no, I love stocks. I love buying stocks. I love the challenge of it. I like the reward from it. It's stimulating. It's mentally stimulating in so many different ways. It's challenging. But also, we lose the ego and just let price and volume guide us. And what's this telling us? Be careful with technology stocks. And it's been saying it for, about 3.5 weeks. Be cautious. That's all. And isn't that good to know? We don't want to buy for the sake of buying. We don't want to do things for the sake of doing things. We strive to do things at the right time and in the right sectors. That helps us. Consumer staples, nope. I mean, look at the daily, look at the weekly. Stay away. You can punch up XLP and see what their top 10 holdings are, and you'll see that, oh, those stocks, you look at the charts, you go, oh, those things have been in trouble for a while. Yeah, this has been telling us, stay away from consumer staples. Here we go. Healthcare, lagging, no power there either. Consumer discretionary, not a lot of power there. Metals and mining, choppy. It started to lift on Friday and they take it right back down. Look at how loose this is. Wide and loose patterns, as I stated, indicate high investor emotions. And high investor emotions are not conducive to good decision making. I'm not saying that to be cute and funny. I'm saying it because it's a fact. There we go. You don't want to get, you look at this. Okay. Oh man, this is it. It's going. This is great. Oh, gee whiz. Oh gosh. Oh look. Oh, this is it. This is, oh, look at that gap up. This is where it's going. Oh, gee whiz. Oh, big gap up. I told you it was good. I told you. Look at that. And look at where it goes up to. The high on this bar, folks, is 54.07. The high on this bar is 54.05. You can say, how did you know that? Watch the H. 54.05, watch the H. 54.07. You think people don't see this? Do you think there were people that bought this and didn't sell and watched this come all the way down here and then it wiggles around and it comes back and they say, hey, if that gets back near my price, what am I doing? You fill in the blanks. If that gets back near my price, I'm selling. It runs up there and they take it right back down. That's called overhead supply. That's a good lesson for everybody. Charts are a reflection of human emotions: fear, greed, panic, complacency. And it's all reflected in price and volume action. There you go. Nothing to do with this, with metals and mining. Be careful. That lesson I just shared right there, that's $1 million lesson for you. That's applicable to everything. Okay? Oil and gas was leading, but it's getting a little sloppier now. Be careful with that. Retailing. The retailer, they're not buying retail stocks. Be careful. Software lagging, nothing to do with it. Be cautious. Here's Apple. This is the MAXLIST, folks. If there was only one list of stocks that I could look at, it's this list, folks. Okay? Now, they're not very good right now, but they will be again. Like right here, oh, this is awful last year. It's dead. Apple, it's over for Apple. It's not going to do anything. Yeah, I'll take that up there. That was a nice trend for us. Okay? We let price and volume guide us. It's falling on the weekly, selling volume. There's no power there. Be careful with Apple at this point in time. And here's the daily chart, of course, as you can see. Continue onward. Amazon lifts up and they take it right back down. Okay? And note, volume on this bar was pretty good, but note where, and this is a great lesson, weekly and daily charts. Look at where it ran up and look at where it closed. It closed in the bottom half of its range on a pickup in weekly volume. They sold into it, folks. They didn't buy. Okay? And it does this and then it drops. And here's another very important lesson for everybody. Opinions don't pay, forecasts don't pay. One thing pays, price pays. Never argue with it. That will really help you. And I'm not looking at day trading and 5-minute charts and 10-minute charts and none of that stuff. I'm just looking at daily and weekly. It really guides us. And this is just telling us at this point in time, on the daily and the weekly, it's trending down. It's below the falling 50-day. Someday it will bounce. Maybe it's going to make a higher low, and we'll be ready. We'll be ready. All right. But right now, there's no great setup there. So just be cautious with it. Alibaba has been lagging for a long time. No real power there. BIDU has been lagging for a while. There's no real power there. Google started to lift up, and then Friday, and this is like the poster child for the market. It starts to pick up, pushes through the 50-day, and then on Friday, it gaps up, it runs up, and then it starts to reverse down on a pickup in selling volume. What did they do there? They sold into it. They didn't buy it. They sold in. Who's they? The big institutions. They sold into it. There you go. We can't argue with it. All we do is observe and get in line with it. And at this point in time, it's telling us to be cautious. Goes up, runs up, and falls on a pickup in volume. Back below the 50-day. We need to see this settle down. Be cautious with it now. Goldman Sachs, there's nothing there, folks. Leave it alone. Goldman Sachs has been good to it. MasterCard, look at this decline. And look at the decline. Look at the weekly. Look at the selling volume. It's just telling you, hey, stay away for right now. And notice what it does. What's one of the most important moving averages? Oh, the 50-day moving average line is, Pat. Yeah, look. Oh, it bounces off the 50-day. It bounces off the 50-day. Cuts through the 50-day. Runs up to the 50-day. Falls again. Big money focuses on that 50-day moving average line. Use it to your advantage. Meta. Meta started to lift off on Friday. Look at that gap up. Lifts up and then reverses down. Okay? On an increasing volume. They're selling up there. There's not a lot of power yet. But I will say, of the various MAXLIST stocks we looked at, if this could base a little bit, I think this has potential. Okay? For what it's worth. Microsoft, downtrend. There's nothing really to do with it. Netflix, it's been a downtrend. Oh, but it's been good to us. See that on the weekly? You see that breakout through 352? 352 all the way up to 470, 480? That's good money. That was on the key list back there. And look at the trend. And it worked. Okay? Now it's choppy. Nothing to do with it. I don't have pet stocks. I let the stock guide us. Nothing to do with it, so be cautious. Continue onwards. NVDA started to pick up, and it backed off too. All right? Showed a little bit of power here, but it needs to show some real power. And I'll say it again. The air is better above a rising 50-day. We'd like to see this start to push above the 50-day. There are clean tops right here, though, and I'll draw this for you. There you go. Simple line. It's nothing fancy. Just connecting these highs. Could it take out these highs here and lift? If the market's good, that could be a potential candidate, but it's still below the falling 50-day. So what do we need to see? We would need to see a good market, and we need to see this push through here, through that line, with good volume and good price action. There you go. Continue onwards. Tesla started to push above the 50-day, and it backed off too. But could this start to get a lift? I just showed you a bunch of MAXLIST stocks that are all below the 50-day. This one actually pushed a little bit above it. Maybe something to watch going forward, taking out these highs. And it did close up on a slight pickup in volume. And the weekly doesn't look too bad too. Okay, but let price guide you. Price backed by volume. Continue onward. Visa. Nope, I don't think they're buying Visa, folks. And it's been telling you for a while, stay away from me. Just stay away from me. You see this bar right here? This is a great lesson. Great lessons. Runs up and notice where it closes on this bar. I'm going to show you on the daily. This is a $1 million lesson. You like to, when stocks break out above lines, you like to see them do it on a pickup in volume and close near the highs. All right? How did it do? It didn't do so well. Okay? It closed in the bottom half of its range on a pickup in volume. It's met with selling pressure. Says be cautious. You like stocks that close near the highs of the days when they break out. And the next day, yeah, I guess other people saw this and said, man, this ain't so good. And then boom, there you go. And as they say in the movie, that's going to leave a mark. And we go back to it. Hold on just a second. It's the last stock we were looking at. There we go. And that helps us. The big moral of the story is continue to be cautious here. It will change. Please don't shut down and say, well, it's over. No, always be prepared. At Mission Winners, we're always looking at the charts. It doesn't mean we're always doing something or that we're doing something, but we're always prepared. And here's why. Bull markets have not been outlawed. We will get a good lift. When? I don't know, but I do know this. We know what to look for, and we'll be ready.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.